This is the One Point Podcast, and I'm Rohit Yadav. We recently released a comprehensive ecosystem-wide report called as Rethinking Venture Capital, a Strategic Lens, in which we explore the entire value chain of venture as an asset class. Now, within this overarching strategic report, we briefly touched upon the topic of democratization, which is becoming a very relevant and an interesting discussion point in the global private market ecosystem, including venture capital. So, to unravel this topic in depth and discuss much more topics like geopolitics, VC fundraising, VC fund investing, today I have Cali Chill from OurCrowd with me. Kaylee serves as the Chief Investment Officer, oversees deal flow activity across the startup and investment fund opportunities. He also oversees management of the OurCrowd startup portfolio and chairs the OurCrowd investment committee. Kaylee joined OurCrowd after serving as the General Counsel for NASDAQ listed Answers.com and for AFCV Holdings, a private equity backed tech investor. He has an illustrious background, a legal practice which focused on commercial transactions, public company compliance, M&A, due diligence, and IP protection. So he has a lot of experience from the legal aspect of things as well. Katie, thank you so much for joining in. I'm really excited.
I'm excited to be here. Really nice to be here on your podcast and look forward to discussing all these topics.
Awesome. So let's dive right into the core topic. What is OurCrowd?
So, OurCrowd is a platform. It was created in 2013 by John Medved, who's a serial entrepreneur. He came from the United States to Israel. He's based in Jerusalem. And the idea of the platform is to basically allow investors at a much smaller scale. We're not talking about millions of dollars of investments like most VCs require in order to get into startups. We're talking about as little as $10,000 for investing in a startup, or $50,000 for investing in a venture capital fund. So the platform basically allows people that are accredited investors to come onto a website, scroll around, browse, the different menu of possibilities, get intimately knowledgeable with an opportunity, and decide whether that investment is right for them.
Tell us more about the background. So why did you choose this retail segment, this accredited segment of the LPs, and why not focus on family office and much bigger investors? So tell us the ideology behind this.
Yeah, so the ideology really is to allow a vast group of investors, people that are on the one hand accredited. You use the word retail. Retail is sort of a loaded term. It usually means just anybody, any mom and pop and person off the street. Accredited investors is a little bit higher than that. The bar is higher. In the United States, for example, it's people that earn $200,000 or have $1 million worth of assets. In other countries, the bar is different. But the whole idea was to open up the class, the VC asset class, to a much, much wider group of people. John Medved basically has been a VC for the last, I would say, 25 years, or maybe even longer than that. And when he was working in the industry, he had a lot of people who were asking, can I get into this? Can I invest in this startup? And finally, he basically said, well, why not? Let's build something that will allow you to put small amounts of money into these very, very exciting opportunities and invest with the big boys alongside, other venture capitals and at the same terms. So that's really the whole ideology behind it. I think that it evolved over time where it's true that OurCrowd is geared towards the accredited investors, but there's many family offices that we have relationships with and more institutional grade investors that are at a higher level than the normal accredited investor. And we use those relationships to help our portfolio companies by bringing money, capital to the deals, but also connections, opening doors for commercial contracts. And basically, we've built an amazing network because many of these accredited investors have connections and abilities to help the companies that they've invested maybe just a small amount, but they're able to help in all sorts of ways.
Got it. So explain to us a bit more detail about the highlights of portfolio and the LP sides. From the LP side, how many investors are already there on OurCrowd platform? And in terms of the portfolio, in terms of AUM, like how big is our crowd? The third question could be with respect to the investors, are they just coming from specific region or are they globally located?
Okay, happy to answer that. So let's start with the investors. The investors come from all over the world. I would say that 240,000 people that have registered to the site since its inception probably come from over 100 countries. Now, that's not to say we have investors from over 100 countries, because not every person who comes to the platform ends up investing. We have many people who come, to learn, to experience the content, to learn about startup investing. There's a lot of interesting and very valuable content that we provide on the website. Out of the 240,000 people, there are about 8,000, I would say. That's pretty much the number of people who've actually invested. And these people come from dozens of countries. So at the beginning, this is a company that's managed out of Israel. So it was very local, with a lot of people investing from Israel. But very quickly, the United States became pretty much the strongest focal point, drawing investors into the platform. Uh, Over the years, though, it expanded and become very, very global. And I would say that today, maybe 50% is US, 10% is Israeli, and all the rest is sort of, rest of world, Europe, South America, a big following in Hong Kong, Singapore. We have investors in Australia, in Canada. So it really sort of runs the gamut. And so it's a very diverse investor base from a geographic perspective. In terms of the portfolio was built to really cater to the tastes and requirements of the crowd. And those are obviously, very many and very diverse. So Israel is sort of a hub for cyber, which everybody talks about. So yes, of course, OurCrowd does many, many cyber investments, but OurCrowd also has investments in the sectors of healthcare and medtech, or mobility. So at the time when the autonomous vehicle was all the rage, we were investing in those types of companies.
Okay.
Consumer electronics companies. We were doing investments in quantum deals way before quantum became so popular. Back in, I think, 2020 was our first quantum deal, which is a company that's doing very well. And today we're starting to reap the benefits and seeing nice upticks in valuation. So the idea of the platform is to really be very diverse across sectors, very diverse across geographies. In other words, investing in Israeli companies, for sure, yes, but also US companies, European companies, some Asian companies. We've done that as well. And we're very diversified also across stages. So in other words, we may be doing the seed and Series A deals at a very early stage, but we will also take it to the Series B, and sometimes even, Series C, D, and pre-IPO deals. So hyper diversified across geography, sectors, and stages.
Okay. And to give a sense of the size of the commitment, how big is your AUM?
So the AUM so far is about 2.4 billion, just shy of that. I would say 2/3 into startups, 1/3 into funds. That's more or less the breakdown between funds and startups. And if you want, I can say a few words about that, because that's also a little bit unique for a platform.
Yeah, please do.
So when John Medved started the company, it was really focused on startups. But very quickly I think it was around 2016, when it became apparent that there was much sort of desire from the investors to see fund products. So the first thing we did was we started putting together index funds, which indexed the companies that were coming to the platform. So for example, we created a product called OC50. That was a product that basically invested in the next 50 companies that would come to the OurCrowd platform. They'd had to meet certain criteria, at least at a certain size, certain level, or whatnot. But at a certain point, we also started investing in third-party funds. So I know that you had a guest, Larson, from Harpoon.vc. And Larson is, a colleague, and we've invested in Harpoon, and we're very proud to be LPs in his fund, and very successful relationship over there. So that's an example of what we've been doing. We've been creating relationships with people like Larson Jensen and going into these funds, mostly in the United States, but also in other countries. We've done a fund in London, and we've done a fund in this region in the Middle East, outside of Israel, Abu Dhabi. So this has definitely become sort of a focal point in the strategy.
Awesome. And so the recent changes to the accredited status and how it's defined within the US, I think that would be a welcome thing from your side, right?
Absolutely. We look forward to having the regulatory bars be lowered and accreditation limitations eliminated. That obviously works for us. I think we do see that also in Israel, for example, there's a lot of talk about reducing the accredited sort of status and lowering the bar. Today, by the way, the bar is very high. People need to have, I think it's 8 million shekels, which is maybe the equivalent of about 2.5 or closer to $3 million in assets, and it's liquid assets, meaning you cannot add the
Okay.
value of your home residence to that, or you have to earn at least about, I would say it's close to almost $400,000 a year, a little under that, in order to be accredited investor, and that is a very high bar. And many other countries have been lowering that bar, and we look forward to continued sort of easing up of that regulation to make it life easier for our investors to come and invest.
So from the portfolio perspective, we have already more than 2.4 billion invested into startups as well as funds. Are there some highlights from the portfolio that you would like to mention?
Yeah. So if we think about startups, we make a lot of investments in many different sectors. We mentioned that already. And I would maybe want to highlight a couple of startups in the cyber sphere, which, as everybody knows, Israel is a very strong player in cyber. We have some of the biggest exits coming out. For example, the latest one, with Google acquiring Wiz for 32 billion. OurCrowd made an investment in a company called BioCatch. This was, I believe, probably almost 9 years ago at this point. And we were very helpful with this company along its life cycle. So, for example, first of all, I'll just say BioCatch is a cyber company. It's a cloud-based solution, and it's collecting and analyzing behavioral parameters, and it's generating unique user profiles, which allows banks and financial institutions to make sure that there's no fraud going on in financial transactions. It's a company that we invested in when it was in the, I would call it maybe 30, 40 million range valuation. This is a company that's now become a unicorn. It's also been sort of in the news because there's been several secondary transactions going on where earlier investors have been selling. We are one of the investors who actually sold a certain portion. Not that we don't believe in the company, but we wanted to bring some liquidity earlier than a final exit. So that's something that we're very sort of proud of, putting our best foot forward for our investors to create liquidity earlier. So that's BioCatch. Another company is ThetaRay, and that's again another cyber company that we've invested in at the earliest stages. Have also been very close with the CEO. Have been sort of instrumental in helping that company along to reach the heights it has reached now. And similar to BioCatch, we're very sort of deep in it from a percentage perspective in terms of our holdings. We're very close with the CEO and with the management team, and we're on the board, of course, and whatnot. So we have companies where we call it our managed deals, where we are doing very close work with the companies, like a VC would expect, value creation, etc. There's also other startups that we invest in, which are more on the access side. And this is a sort of a differentiation I'd like to make, which usually you don't hear from VCs. This is unique to OurCrowd. OurCrowd does the managed, which we talked about, but it also does access deals. And that means that we're also investing in companies like OpenAI or XAI or Databricks. And these are some recent deals that have come onto the OurCrowd platform. These are deals that typically very hard to get into unless you're like I don't know, Menlo Ventures or Sequoia. Now it's true, we are getting in at much later stages. So some of these deals are already in the billions. When people are investing, investors believe that these companies, even at 50, 60, 100 billion, if they think it's going to a trillion, they're going to invest. So OurCrowd creates SPVs to allow its investors access to these types of deals. It's obviously we're a blip on the cap table. Usually we're getting in through a third party. It's not so easy to access these deals. We have to find the right sort of relationship to allow us access to the deal, but very lucrative for OurCrowd. These deals are deals that go very quickly. They're very much in demand, have a lot of success in raising for those. So that's on the startup side. In terms of mentioning a few other funds, well, we talked about Harpoon, but I'm happy to mention a fund like Rebel. Rebel Fund is run by a gentleman by the name of Jared Heyman. He's based in LA, and he created a Rebel to basically sit on top of Y Combinator deal flow. And they have developed a AI-driven algorithm that helps them cherry pick prior to demo day, the best companies that are coming to do the demo. And he's created an amazing franchise. He's already with 2 funds. We're in both of them. We're a very sizable LP. We're very proud partners of Jared. And these are the types of funds that were basically created by an emerging manager, which we made a bet on. And the funds are doing great without going into any, specific performance numbers. But, this is a place where we can leverage the relationship not only to help the investors who are LPs in this strategy, but also get co-invest opportunities from Jared and hopefully invest in the companies that come and become breakout companies.
Awesome. Thanks for highlighting the portfolio. Now, OurCrowd has been ranked by PitchBook as Israel's most active VC investor. With this comes a lot of responsibilities. So tell us more about the emotional side of things. How has the business been? There's always ups and downs. Do you have some nuggets to share with people?
Sure. I'm happy to share. So it's true that OurCrowd has been the most active investor. I think that being a platform basically allows us to do many, many deals. That's not to say that all the deals are going to be successful. And I will say that one of the challenges that OurCrowd has is that if you are an investor who came to the platform and invested in one company or 2 companies, and that's it, and if that one company or one out of the 2 companies or both companies have gone poof, you're not going to be a happy investor. And we don't encourage people to do that, but that sometimes does happen. We would, of course, encourage people to create a diversified portfolio, make sure that there's different sectors in there and obviously different stages, and maybe put some money in fund products, and then you're really diversified. But one of the challenges is that I think investors that come sort of a fly by night, sort of, I want to get into one deal, and then a year later, if that company fails, that investor is probably not coming back to OurCrowd. Remember, we are a platform. We are not an investment advisor. We're not recommending people to go into deals. We're opening our platform and providing access. People need to make their own decisions. They need to do their own sort of business diligence. We, of course, provide a lot of material that people can use on the platform, but it's like that. So I would say that that's one challenge. Another challenge is that because we are basically coming to companies and raising each time from our crowd, right? That means that we don't necessarily know with 100% certainty that we will be able to bring the full amount that the company expects us to bring to the deal. And this has been an area that created certain tensions in some cases. So, for example, if we are now in a round where the company is raising $20 million and we've basically raised our hand and said, we think we can raise $3 million here. Our documentation vis-a-vis the company, it's like a side letter that will usually say something like, OurCrowd is going to work on the best efforts to bring $3 million to the deal under the following terms. Okay. Well, what happens if you're a CEO in a round like that and you end up getting only $2 million from OurCrowd? All of a sudden, you're missing 1 million out of the 20 that you wanted to raise, and you don't care that OurCrowd didn't have such a successful, campaign. That's going to be an issue. So these are examples of challenges for a platform like OurCrowd that needs to go and raise from its constituency each time again and again. On the flip side, many times when we do have successful raises, we have LPs in a SPV that are happy to come and bring more money to these deals as the company comes back for follow-on rounds. So, for example, if we have a company that's done a seed round and we've had a successful raise and people are excited about the company, sometimes a different fund will say, well, I don't have more money for the next round, but with OurCrowd, it's pretty limitless. We just go back to the existing investors and we go back to the whole crowd, our full sort of 240,000 users and say, this company is doing great. Do you want to raise more money for it in the following round? And many times we're very successful. And I believe that our numbers are very high in terms of the follow-on money that we bring to our companies, sometimes much, much higher as compared to other funds where they can't continue on to A, B, and C. At some point, they're tapped out. Yeah. Another interesting point that sort of goes hand in hand with that is that we have certain relationships with other fund managers where they have a pro rata and they come to OurCrowd and say, we have pro rata, we cannot fill it, but maybe your investors are interested. We obviously have some sort of an economics sharing deal with those funds where we will then put it on our platform, send it out to our investors, And that's something that's more difficult for a regular VC to do. But these are just some interesting nuggets that are sort of unique to our business model.
Super, super interesting. And that's a perfect segue into the next section of this podcast, which is focused on democratization shift within venture. So, how, according to you, has the LP structure evolved around who is allowed to invest into venture capital in this last 5 years or one decade? If you can speak to it.
Yeah, so I would say that first of all, we see many other platforms like OurCrowd that are raising money from accredited investors, and some of them even from non-accredited investors. So
Mhm.
I think we can mention firms like AngelList. There's Funders Club. There's many different names that come to mind. Republic, Seed Invest. I think that these firms that have basically sprouted up over the last 10 years are basically the proof that the LP situation is changing across many geographies.
Okay.
And in Europe too, I think we see, for example, we've worked with a firm called Moon, and they are working similarly to OurCrowd, but on the PE front, not the VC front so much. So I think that LPs are definitely becoming smaller and are being tapped into from much sort of wider corners of the financial markets. In the past, we would never have conversations with a big financial institution to do a deal with us for basically allowing their investors to come onto the OurCrowd platform and put money into startups. It was just unheard of. The fact that that's happening and that we are able to have these relationships and these relationships are growing means that the industry believes that the $90 trillion of wealth that are out there need to be tapped into. And I think that they realize that doing it through the OurCrowds of the world is probably a good strategy. I think
Got it.
another example of that is the fact that in the past we were not able to really get into some of the top echelon, funds. So, for example, we had Lightspeed on our platform very recently.
Mhm.
10 years ago, I don't think Lightspeed would probably look to work with an OurCrowd or a Moonfair to raise for its funds. But the fact that we have a good relationship, we had a great raise for them, able to bring capital into their round is showing that that's changing. And this is sort of a dynamic which is sort of going across many other platforms that we're familiar with.
Okay. So from the number of platforms, obviously there's a growth. There are a lot of platforms which are coming up across the globe. Second, there's wealth with the accredited investors or retail investors, which needs to be tapped into. I want to flip this question and say, why is then democratization of VC asset class essential from an LP perspective, from the person who is actually coming to the platform? And how is our crowd winning this game?
From the LP's perspective, if there were no OurCrowds, they would not be able to put these smaller sums of money into a deal or into a fund. It all comes down to the access.
Mhm.
If and I'll give you an example just from a conversation I had this afternoon with a very close friend of mine. So this is a guy who wants to get into a drone deal. He says, "Kaylee, get me a drone deal. I see the war in the Ukraine. They're using these drones. I believe that these drones are going to take over, defense tech, and I want you to get me a deal." And I said, okay, we actually have a few drone companies that we can bring, but how much money are you thinking of putting into it? And he said, well, I'm not going to put more than $20,000. Well,
Okay.
that's the answer. Where in the world can you park $20,000 and get a piece of an SPV that is inside a drone company, which is
True.
growing its ARR thanks to the geopolitics of the world? That's basically the answer, and we see more and more of that want and desire of people to get access to these deals, but not have to put down $5 million. That's not capital they have available, but they're very happy to put $20,000 here or $30,000 there, and the only way to do that is with these platforms.
Awesome. And how is our crowd winning this game?
So OurCrowd, first of all, got a nice head start because
Okay.
back in 2013, it was groundbreaking. I think now the world sees, and there's many other platforms, and we mentioned some of the names. This is sort of the future.
Mhm.
I think that winning the game is constantly thinking about what kind of products you can bring to the market, which will be appealing to investors. So I'll give an example. Um, when we found that there is a strip sale going on by a big fund called NEA, we decided to try and offer that on the platform. Now, we had never done that. A strip sale is basically where NEA was taking something like, I think it was 14 or 15 of its, prime assets, many very successful companies, putting it into a CV, which is a continuation vehicle, and bringing new money into that CV to basically bring liquidity for its earlier investors. This is something that is done, and usually sort of only if you're like a family office that can write a $1 million or $5 million check, you're able to access that. Mm-hmm. We brought that to the platform, and sure enough, people jumped on it. And the reason they jumped on it was because inside that strip sale were companies like Databricks, Plaid, very sort of high profile and up and coming AI hype companies, I'll call it. And everybody wanted a piece of that. So this is sort of a way to get new active investors excited about something that you can't necessarily find out there in the open. I mean, yes, if you are a big VC or a very big family office, you're probably going to be able to access it. But for the smaller family offices, somebody who's writing only $300,000 or $500,000 checks, it's not accessible. So again, we're talking about the whole idea of democratization is find the right products that will work for bringing in these investors that are looking for something fresh, something new to do with capital, which is going to hopefully make them returns over the next several years.
Got it. So it's not just about access to opportunities, also about quality of access.
Absolutely.
And that's where you guys
absolutely. The quality is absolutely key. And I think that OurCrowd started off in the first few years. It had a problem with quality. It was doing all the deals that it could do because it wanted to bring in a lot of AUM. And I think that was sort of a challenge that we sort of had to take a look and take a step back and say, let's look at what we've invested. There's not everything is doing well. Let's be more selective and let's make sure that the quality is at a much, much higher level so that investors are attracted to only the best deals, the exclusive deals, and the ones that we believe are going to do best in terms of ROI for the investors.
And I want to ask another angle, which is risk. So there are accredited investors which are coming in and let's say investing into certain opportunities. You act as a platform. So when those investors come on your platform, what kind of risk are they thinking about?
Well, I believe that any investor that's putting money into VC understands that the reason it's VC is because it's venture, and that means that it's risky. So any deal you put your money into, there's absolutely no assurance you're going to make money on this deal. Mm-hmm. Even if Lightspeed invested in it or NEA invested in it, and forget about OurCrowd, but I'm talking about the sort of the ones that people believe are leading the pack. You never know. We are very careful to have as part of our materials a whole set of risk factors that are usually tailored for a specific deal. So that means that when you're going onto OurCrowd, excuse me, there's a document that's called the Our Take. The Our Take is basically a summary of the investment memo or the investment thesis. It gives you a whole explanation about what the company is doing, where the company is going, why OurCrowd is excited about it. It also refers to the risks. There's obviously general risks that have to do with any investment you make, but there's also specific risks that may be attached to the specific sector you're investing in, the specific stage this company is in. Maybe it's at a very, very early stage, and it's obviously much riskier. So I think that risk is definitely something that is always sort of out there. I think our investor base needs to be educated because sometimes the accredited investors who are coming from sort of, the doctors and the lawyers and the founders and they're not as sophisticated as the family offices and the VCs, and they need to be educated. And therefore, OurCrowd has in its materials and has had many webinars talking about that side as well. At the end of the day, there's always a balance, right? You're saying, okay, what's the risk reward? And make your own decision as to whether you're comfortable with the level of risk.
Yeah, I think with respect to education, you're right on target, and there needs to be so much more, not less, because it's a private market, private asset class. There's risk of losing money. Obviously, there's a high volatility in terms of performance with respect to the startups, with respect to the funds, and so on. So the understanding of the risk needs to be there.
I agree.
Good. I want to move to the next segment of this podcast, which is more about the VC fund investing, because you have already invested into 58 plus funds in different geographies. So what's your fund selection methodology and philosophy?
Yeah. So just to remind you, we spoke at the beginning about the different buckets that we have. We have the startups and we have the funds. And within the funds, we have our internal funds that we are the GP of. And we also have the external funds where we're making bets as LPs on third party funds. By the way, I didn't mention, but we're also doing some other alternative investments in PE or venture lending and distressed assets. So there are different strategies that we're trying all the time in order to get investors what they're looking for. I think that the most successful strategy has really been the third party VC funds. And there's two sides to it. There's the emerging managers where we actually have done a ton of diligence before making a decision to go with, for example, we mentioned Rebel in LA, or there's another fund called Soma Capital, a fellow by the name of Anil Randiv from Soma Capital. So these are managers who have yet to prove themselves, and obviously we're going to reap the benefits if we're right. Our selection and allowing our investors sort of early access before the fund becomes much more expensive with its management fees and almost inaccessible because everybody's sort of trying to get a piece of the limited allocation. So there's that side of it. The other side, and this has become more and more of a strategy for us, is what we mentioned about doing a Lightspeed or doing NEA. Our most recent fund that we've put on the platform is a fund called Draper Associates. Some of the people listening to this podcast might be familiar with a gentleman by the name of Tim Draper. He's sort of a legendary VC. He was associated with a VC firm back in the 90s. His whole family is like a venture capital family, his father, his grandfather, his children. But Tim Draper started a Draper Associates, and now he's at fund number 8. So this is sort of where the network and the sort of personal connections of somebody like John Medved come to forward. And at the time when Tim Draper was doing his 7th fund, John called him up and said, can we participate? We'd love to list your fund on OurCrowd. And Tim said, well, it just so happens that we have a $10 million piece, or I don't remember exactly what the number was, but there's been some sort of a last minute change. And if you want, and if you can move quickly, by all means, we're happy to, work with you. And we very quickly, a mad dash with the legal and putting up the SPV and everything had to be done very, very quickly because they were sort of at the last, 12th hour of bringing money into that fund. But it was a very successful raise. And the reason it was successful is because there's a webinar led by Tim Draper telling stories about the companies that he, invested in, like Tesla and other names like that, way, way at the beginning. And it's just sort of people love to be a part of something that is recognizable and something that they can talk about when they're playing golf with their friends or when they're having drinks after work, and it's really a successful raise with a Tim Draper or with a Lightspeed, just thanks to sort of the name and the cachet of that of that type of brand. So, but I want to emphasize that OurCrowd is putting money also into the emerging managers, because with the Tim Drapers, yes, we'll get a lot more money in. With the emerging managers, you can actually get much, much larger allocations. And you can also sometimes create certain interesting economics between OurCrowd and the emerging manager. So there have been both. I'll highlight another fund, which I think is a unique fund, which we got into, which is called Valerian Space Ventures. Valerian Space Ventures is a space tech fund. Most of their companies are dual use companies that are obviously a lot of defense angle to it, but always sort of with a dual purpose, with a civil side, with revenues associated with that side as well. So this is a fund that we got into several years ago. The fund manager is somebody who comes to Israel a lot, so he has sort of an Israeli side to him. And when he visits, we always meet with him. And it was sort of a difficult raise to do that first fund because it was pretty much their first fund. They had, but before that, done a very, very small fund, which is sort of hard to call a real venture capital fund, but it had investments. So they had a little bit of a track record, and it was hard. It was very hard to go out and tell the story because even though people might be excited about space, they're saying, okay, but why don't we go to so and so that's raising $300 million like this because they've done already 4 funds. It's difficult, but now that they've created a track record, they've had some amazing investments. We are now raising for their next fund, and sure enough, this raise we're expecting will go a lot easier. So it's all about sort of the balance between the emerging managers, also the named funds. And I think investors are interested in both, and we have to find sort of the right ratio in terms of what we breed.
Okay. And in terms of your selection methodology of which kind of funds, specialist versus generalist, emerging versus established, what kind of funds will come on the platform? Do you have like a selection criteria that you look at?
We don't have a selection criteria in terms of like the sector it needs to be in or the stage it's investing at. What we want to do is we want to bring a wide selection. We want to have several products at any given moment doing different things. So, for example, what I just said about the space tech fund, you have that on the one hand, and then you have a much more traditional sort of deep tech VC, which is investing very, very early stage, but across many, many sectors like Tim Draper. So we'll have that side by side, and they're very, very different strategies. So it's really sort of a generalist approach in trying to get to cater to all these needs and tastes and flavors of the.
So what really differentiates our crowd from, let's say, other fund of funds, VC fund of funds, which actually there has been a growth in the fund of fund business as well within Europe as well as the US?
Yes, absolutely. So everything I've been talking about now is sort of a fund of fund, not plural, but fund of fund strategy. And that's very different than a fund of funds, right? Because, for example, if you are Vintage Partners, right, that's a huge fund of funds, very, very successful. Alan Feld, amazing investor with huge success here in Israel. When Alan Feld is creating a fund of funds, it's going to create a fund that invests in 10, 15, 20, whatever number of funds they're doing. You're not choosing which funds Alan Feld is investing in. But when you come to OurCrowd, if you like space tech, you can invest in a feeder fund that goes into Daniel Kleinman's Balerian Space Ventures. If you are interested in deep tech across many sectors, you can go into Tim Draper, only into that fund. So in other words, with us, the selection is allowing you exposure to what you are interested in being exposed. Now, that works for certain constituency and maybe not for others. Other people just say, forget it. I don't want to deal with, making these choices. Just put me into a fund that's investing in many, many funds. Okay, we're going to have that as well, by the way. And I can talk about that product too, if we have time, a fund that we're calling Covest. But at the end of the day, what we've created so far is the ability for choice at the individual level. What do I want to invest in? What type of startup or what type of fund? And I can go only into that, or I can go wider and invest in several. That's a differentiator.
Got it. So I see the time is running out. We have captured a lot of things. I want to talk to you specifically about geopolitics within venture. And I think you're one of the best persons because you're located within Israel, and there has been a lot of geopolitical flux these days. We can all see it in the media. So how has the venture landscape evolved to become this increasingly shaped by geopolitics over the last years? And how have your LPs within our crowd reacted to it?
The geopolitical angle here is sort of very, very broad because it encompasses many different facets to it. So, for example, when you talk about what happened between Russia and Ukraine, right? So that war created a whole, issue of sanctions and all sorts of regulatory issues that created problems for us in terms of a platform when we're onboarding people. And that can be one angle of how sort of it can be disruptive to the day-to-day business. And I'm sure that a lot of financial institutions ran into similar issues. Other than that, there's sort of the tensions and everything that comes from there. So first of all, I think that the tensions there are creating this race to the AI, which we are constantly reading about. So these big firms, these big LLMs that are coming from the United States. On the other hand, you see these much, much smaller Chinese companies that are doing things at a fraction of the cost, but they claim to be doing exactly the same thing. That's also creating a lot of angst for investors. So, for example, if you're an investor who invested in Anthropic on the OurCrowd platform just a year ago, and all of a sudden you see, DeepSeek come out of China, and it claims that it's doing exactly what Anthropic is doing, but at a fraction of the cost, you immediately pick up the phone to OurCrowd and say, what the hell is going on? Like, is my investment in Anthropic still okay? Is that company still as valuable as it used to be? That is sort of, and it comes from a geopolitical background, this issue. So that's why I think it's a very good example. By the way, Anthropic, when we raised for that investor at 17 billion, raised a year later at 63, and now I read an article today saying that it's going to 100. So, maybe it's not that big of a problem for our investor, and we can maybe calm him down specifically on his question about that. So obviously, issues like that are impactful. But I think really what, as you said, we're here in Israel, and we just went through, I would say, a terrible time ever since October 7th, but also the June 13th war with Iran, which lasted for 12 days. I think that's sort of a pivotal moment for Israel, but for the world at large. And I think what Israel's able to do, without getting into the politics of this, but Israel, thanks to technological supremacy, and don't get us wrong, that is exactly why Israel dominated that war, because technologically we were able to bring to the war everything that we have been working on the military side for the last 20 years, and plans that were put in place for the last dozens of years were finally able to come out, and it all comes down to technology. So, for example, we made an investment in a company called Emprest. Emprest is the brain behind, or the control and command behind, Iron Dome. Iron Dome, as you know, has basically been defending the Israeli skies for years and years. And recently we made another investment in a company that is going to be the sort of 2.0 Iron Dome, which is a laser company. I can't mention its name because of confidentiality reasons, but this is a company that's going to be powering what we're calling the Iron Beam, which is going to be shooting missiles out of the sky using lasers. So I would say that geopolitics is sort of a huge, impactful, I would say, factor, creating industries, putting industries that were sort of in the backseat, all of a sudden raising them, putting them on a pedestal, putting a spotlight on them. So companies like Emprest and this other company, all of a sudden they come out of anonymity and they become these very, very valuable and sought after investment opportunities. So I would say that there's a lot that's happening that's shaping what we're investing in, where defense tech was very low on the priority. And now all of a sudden, OurCrowd is making defense tech investments, looking for drone companies. We talked about that half an hour ago about my friend who said, get me into that drone company that's doing drones. I believe in this. So that is all coming from geopolitics. And I really believe that the Iran war is sort of the place where from there, new technologies will emerge, because the IDF probably has a whole list of takeaways from this war, which is going to drive the development for the next 10 years of the new technologies that are going to come to the fore. And the people that are going to be developing them are the soldiers that are coming out of Unit 8200 and Unit 81 and all of these units that people hear about and say, wow, like, if those Israelis, if we could only get our hands on those Israelis coming out of these sort of think tanks from the IDF, they're creating the next group of successful companies. And then hopefully not only in the military, because we do hope that, wars will subside and these technologies will do amazing things, for peace and for humanity and for making the world a much better place. So that's sort of how I look at, the geopolitics impact on investing, for us.
And if you zoom out and look at other geographies, do you see geopolitics still playing a much larger role with respect to the investments our crowd platform is trying to make? For example, let's take an example of the US, which is not directly involved in any conflict. Yes, indirectly maybe, but not directly. And then do you see the geopolitics playing a much larger role to that extent within the US startup, as well as the kind of fund investments that you're making?
I believe it does, but I think it comes from a different, side of things where, for example, if you have sort of supply chain vulnerability, right, because of the war, that's impacting the whole world. That's not just impacting the region around Russia and Ukraine. The supply chain vulnerabilities are obviously creating the need for solutions, which are coming from new technologies that are being developed, as we speak around something like that. Or, for example, what we talked about, sanctions or, other market limitations that are created from these wars between countries. It could be the tariff war started a few months ago. That is definitely impacting the ability for certain VCs to make investments into companies that are impacted specifically by those tariffs, if they're, talking about export of their products, in between countries, these are things that are absolutely can be very detrimental, and they're causing VCs to stand back and pause before making an investment with all of these tensions that can be very problematic for the companies. So
Got
so it's definitely out there, and it's definitely impacting, and we're keeping an eye open for it from a global perspective. But all in all, I do see how geopolitics is also fueling and helping, development of new technology.
So we're almost through, and I want to ask this one last question. What's next for our crowd? And maybe you can also talk about the co-vest product that you're developing.
Yeah, with pleasure. So I think when you say what's next for OurCrowd is always thinking about what's next. We're always trying to figure out what is a product that will resonate for the crowd. And Covest is a good example. So Covest is basically designed to become a very sizable fund. I'm not going to throw out numbers, because then if we don't reach it, people will say, you said it was going to be, up to that number. So sizable fund where half of it is supposed to go into funds. So we talked about fund of funds. This will be a fund of funds product, but the other half will go into co-invest opportunities that are coming from these funds that we're going to be investing in. So think of it as 6 to 9 funds, 20 to 25 companies, where we're going to be cherry picking the absolute best that we believe are, these coming out of these funds, with the idea that basically it'll be investing in the sectors that we know best and that we're deep into. So AI, fintech, cybersecurity, and general software and things like quantum. So this is sort of going to be a very exciting product, which allows somebody to get exposure within the fund to both sides of the OurCrowd platform, the funds and the startups. And when you're going to be looking at the management fees, it's going to be very attractive, because we're not going to charge anything for the access to the fund. So in other words, if Tim Draper is charging 2 and 20, that'll be 2 and 20 for getting into the fund.
Wow.
The
Okay.
only charge will come from the side of the startups, where we're taking the management fee for, making those selections and managing that side of the fund. So we're big believers. We hope people will engage with it. And, we look forward to many investors coming to learn more about our products.
Super interesting with Cali. Thank you so much for joining, covering such a wide scope on the venture industry. We started with our crowd. We talked about democratization. Then we went into the VC fund investing, and then obviously geopolitics. And in between, we talked about a lot of points. Thank you so much for joining in, and all the best for your next phase.
Thank you so much. It was my pleasure. Take care.